G'day everyone, welcome to this weekend general update for the 2nd and 3rd of March. And we're still in undecided territory when it comes to the S&P 500 as to whether the correction is finished or whether there's still a bit more to go. Now the reason we look at the S&P 500 is because it really does set the tone for global stock markets. Now to a degree, markets are moving a little bit independently. The Australian market has been going very well because there's been a lot of overseas money coming in, chasing the higher yields that we've got here, so our market has done better. But that trend may be coming to an end, particularly if the Australian dollar comes off at all. But the S&P is always a good place to start because it really does give us an indication and a confirmation of how the global money flows are actually going towards equities. So let's have a look at the details from last week. This is the normal licensing information and general advice disclaimer. So a bit of a summary for the week. The S&P index gained a couple of points on the week, but I must say that this increased volatility that we've seen both to the upside and downside is fairly typical of corrective tops, so that's why I'm still 50-50 on whether this correction has actually completed or not. But look, whether it has or whether it hasn't, I'm still of the view that any correction that we get will still be shallow and relatively brief. So I haven't changed my view on that at all. And the key levels to look for to demonstrate whether the correction is finished or not is a close below 1485 or a close above 1530. So they're the two key levels. We'll have a look at that chart in just a minute. By comparison, our market had a very good week. It gained 68 points, with the bank still really being the mainstay of our market. Certainly commodities took a bit of a hit on Friday. There was some PMI data out of China that took the gloss off some of the resource stocks. But there's some small to mid-cap high quality stocks that are still basically ignoring the broader market, and we've seen moves of 10, 15, 20, even 30% in the last couple of weeks amongst some of these stocks. So you can still trade and invest in those stocks with a high degree of confidence. Now US bond yields continue just to track up a little higher, nothing dramatic, but there is definitely an uptrend. And the US dollar rose a little on the week. It's really more about the euro being a little bit weaker, and the US dollar is moving towards a medium-term high at 84 cents. Now next, gold ended up losing $3 on the week and was very disappointing because it had the opportunity to bounce off support and head back up towards the 1650 mark. It was unable to do that, and in 2 days lost a fair bit of the gain that it had made. So very, very disappointing. And it's really the continued selling pressure from the futures markets that just keeps coming in over the top and just swamping the buyers. The fundamentals support higher gold prices, but at the moment the vested interests and others playing the gold market through the futures area are holding the upper hand at the moment. So 1550 is critical support for gold. A break below there, I think you might see a fairly quick $50 or $100 move in gold to the downside. Copper continues to decline, which is not a good sign. I'd been feeling very confident about things when copper was up around 370, but this sharp decline back to 345, part of it is the US dollar moving higher, but part of it is related to the perceived outlook for the global economy. So it's not panic stations yet, but it's certainly not the sort of trend that I wanted to see. And oil has also eased back down to 91. I think that's largely US dollar impact. And this is the 6-month chart for copper. So you can see in November last year we were down around the 345 levels. We moved up to 375, but have come off again and lost roughly 3 months worth of gains in a couple of weeks. So quite a sharp move back down in copper, not a great sign for resources. So a lot of caution I think needs to be exercised around resources. Now let's have a look at a couple of charts. This is the S&P 500. If we pan back, you can see we've got a big picture all-time high up at 1570. We've also got quite a good trend line through here that's picking up these lows and could provide possible support to this correction if it's still got a bit further to go. Now you can see that so far we've had a couple of sharp moves to the downside, but it hasn't even really got down to this first support level. If we put a Fibonacci retracement on there, then we can see that we've also got some likely support around the 1460 mark. So 1460, 1465 is the area that we'd be looking for support if it hasn't bottomed already. Now the volatility that I talked about, you can see here the 20th of February and the 25th of February, big moves to the downside, big ranges, and then we've also had some more move to the upside on Thursday, but it lost all those gains. So quite a lot of volatility, big ranges, and lots of closing off the highs. So if I had to toss a coin, I think I would still be looking for a bit lower yet. I don't think the S&P 500 has bottomed yet. It just seems to be more selling pressure than buying pressure at the moment. So there could be a bit more to play out yet. But as I said, that will affect the majors, but it won't affect some of the the impact will probably be much more minimal on some of the really high quality small and mid cap stocks. Now let's have a look at gold and silver. Well, before I do that, I'll just have a look at the US dollar index. So you can see it's tracking back towards the highs around 84 medium-term highs, and that's really more a function of the euro. So that's keeping the pressure on commodities and gold, etc. But it is getting pretty overbought now, so I wouldn't be surprised to see a bit of a short-term turnaround in the dollar index, and that would be positive for equities as well. Now let's have a look at gold. This is gold on a weekly chart, so you can see this really important 1550 level. It's provided support just time and time again. If that breaks, I think you'll probably see a sharp 100-point move, probably getting somewhere down around this maybe 1425 area. Could be the next target. Now gold, even on a weekly chart, is oversold, so there's every chance this could be the base and it turns back up. But the more that this has gone on, the fact that we had quite a good bounce in progress during the week but lost it all by the finish is not really what I wanted to see. Just switching to the daily chart, you can see there really is quite a strong downtrend in gold. We had 4 days up and then 3 days down. Now a little bit of support did come in on Friday night, so it wasn't close on the lows, so we'll just have to wait and see what happens with gold. Let's have a look at the main gold stock indices. This is the GDX. It broke support at 40 and it's now just formed another lower low on Friday night, so this is not good. It's oversold. The next level that we're looking for is going to be down here around about the $34-35 mark. We're currently sitting at just under 37.50, so there could be another couple of dollars come out of the GDX index as well. Now looking at the Australian market, our index, you can see, remains enormously strong. We're still up near our medium-term highs, whereas the US market is below those. But conversely, we're still well below our all-time highs. If we go back to 2007, which we were up around the 7,000 mark, just doesn't quite come into this chart. So we're still well off our main highs, but you can see there's an enormously strong trend in progress here. So that's it for this update. I guess we'll know more over the unfolding week. So talk to you next weekend. Cheers.